last week I got a question and they said, what do you mean the market is strong, or what do you mean the market is weak? And so I'm going to answer that question, and then of course we're going to look at last week's price action. And so first of all, let's start with last week's price action, and then I'm going to get into the nitty-gritty of how to look at a chart of breadth and a chart of the S&P 500, and you can see right there what I mean when I say the market is strong and what I mean by the market is weak, and then also the chances that we are close to a turning point, how to interpret that. All right, here we go. Here's a chart of the S&P 500. And here's a look at that chart of the S&P 500. It's a weekly chart, and a couple things. Number one, we broke to the upside. So the prior week we had a buy signal, which is this bull bar here, and then the trigger was above last week's high. We got there. Nice bull bar. We'll see if it can continue, which is the second thing that we want to look for is, okay, if price does continue, what happens right here? We want to see, for bullish behavior, we want to see follow through. If next week comes on Monday and we start trading and it just goes immediately down, that is not good for the bulls. So great week for the bulls this week. This is what they had to do to flush out some of the bears that were shorting in here, and we'll see if they can continue with that. All right, here is a look at a chart that we can use in order to determine whether a market is strong or whether it is weak. So first things first, this is a chart of the S&P 500, this top one up here, and then the bottom one, this is a chart of the bullish percent of the S&P 500. Now what I like about the bullish percent is that it represents the percentage of stocks that are either in a buy signal or a sell signal on a point and figure chart. And on a point and figure chart, there is no opinion about whether or not it's a buy or sell signal. It's either a buy or a sell. The rules are very clearly defined. So right now, for example, the chart, it says 61.2%. That means 61% of the stocks are in a buy signal on the point and figure charts. Now, so there's two things that I want to point out here. Number one is divergences. The second is the raw level of the indicator, which gives you an idea of whether or not the market is strong, weak, whether the trend will continue or turn. So first things first, divergences. With all oscillators, one of the things that many look at is a divergence. A divergence is simply a mismatch between a high of price or a low of price and a high of the oscillator and a low of the oscillator. So for example, market runs, S&P 500 runs up, oscillator runs up, falls, both fall together, everything looks good. Market runs, makes a new high, oscillator does not make a new high. That's a divergence, that's a warning. And if you did take the sell signals in here, then it was a good transaction for you. So same thing here. We see a run in price, and we see a run in price, run in the oscillator, again, divergence, and then a fall in price. Question is was this fall great enough to knock the bears out for this divergence? And that's what we're going to be watching for coming into this week. Now the second thing, which brings me into, that's what I mean, and that's the raw level of the indicator, and that's what I mean by the raw level of the indicator. What I want to show is that, okay, so when the indicator gets very, very overbought quickly, that's a sign of strength. And you saw that right here. Price went up, or the oscillator went up, it got very, very high, price went up, and so even though there was a pullback, chances were that we were going to at least test the highs. So you saw the same thing right here, pullback in price, at least to test the highs. So that's what we want to see coming into this week. Will price continue to the upside? If it does shoot to the high side and the breadth does not follow, that's a big warning sign. If, however, price shoots to the upside, the oscillator shoots to the upside, that's a really good sign for the bulls, and that's what I mean by the raw level of the indicator. So right now, market's looking a little bit weak. We'll see how it closes, but this is one way that you can look at the market and show whether or not it is strong, weak, strength is improving, or not improving, getting weaker. All right, that pretty much wraps it up for this week. In closing, Look, we're going to see what the S&P 500 does this week. If it does approach the highs, we want to see breadth continue with it. And then secondly, breadth is a great way to help develop your trading plans and your triggers that you take and that you don't take. One of the worst things that somebody can do is try to short the highs or try to sell the highs of the market or buy the lows of the market. The oscillator, the breadth oscillator, is a great way to tell you whether or not that this is a good risk reward as far as that buy signal working for you or the sell signal working for you. So once the market gets moving in one direction or the other, it's like stopping a freight train sometimes, and that's what the oscillator tells you is, hey, is at least the freight train slowing? Is it slowing down? That's what the oscillator tells you. So, all right. Hey, look, have a great week. If you like the video, subscribe, thumbs up. Have a good weekend. We'll talk to you next time.